We got audio that time. That's a special treat. Again, my name is Jonathan with IVolLive. Today, I want to focus on IVolLive. Specifically within IVolLive, I want to focus on the different ways to access and view our charts. We'll cover, some different underlying instruments like the VIX and SPY, some common things that people, enjoy viewing and things like I view every day as an options trader myself. And then we'll answer any questions at the end. If we don't have time to cover everything within charts, because it's kind of a big topic, what we'll do is typically we'll do a part 2 next Tuesday, where we dive into kind of greater detail on anything we don't have time to cover today. I'm sure it's a busy Tuesday for everybody, so I want to make the most of everybody's time here. So we will get going. Let me get the Zoom toolbar out of the way. I'll record this as well, so that way our team can edit it and shoot it to everybody. Right before the webinar, I logged back in, so you could see exactly what it looks like when you join IVolLive. If you're not currently a user of IVolLive, that's totally fine. We'll cover that in a second. But if you are a user, here's what you see when you first log in. You get our friendly little concierge here welcoming you to the show. Here's the dashboard. These are the different ways to access the tools. We're going to spend a lot of our time today in this IVolLive tool. The other, of course, most popular and powerful features of IVolLive is underlying sentiment analyzer, P&L calculator, real-time spread scanner, backtest data download, and daily updates. So, we cover each of these in kind of their own Tuesday topic. To keep your eye on your email for when we'll cover it, because the overall idea is IVolLive is a very powerful data and analytical tool that you should then pair with your options trading. So, I trade options all the time. Every week, I'm at least putting on a couple trades, and I use IVolLive as my research engine before putting on the trades with my brokers. So you won't actually make a trade from the IVolLive platform, but what you'll do is you'll use things like the charts and the sentiment analyzer and the P&L calc to identify, analyze, and analyze the trades. So those are our most popular features to do so. Again, IVolLive, this is kind of telling you what I just said. You can also, depending on your device, you can expand, contract, whatever your favorite view is, kind of from a housekeeping note. And then any questions, we're always available at support@ivolatility.com. If you are not currently a user, shoot us a note to support@ivolatility so we can get you set up and going with the platform. So here we are, just real quick from the dashboard. Charts, which is our topic today, charts are useful if you know what you want to look at, right? Obviously, you're not going to pull up a blank chart. So it's important to know what you want to analyze, what you want to look at. We'll cover some of my favorites today, but some of the ways I get those ideas on what I want to analyze further with charts is I come through here, I look at the latest news. Our service is constantly scouring the market. 24/7, 7 days a week. We never give it a day off. And this is just giving me little quick hits on what's going on in the market, whether it's company specific, market specific. I always get, maybe one or two interesting ideas to dig deeper on under our latest news section. The other place I come kind of coffee in hand is this news and research. We put out our own editorial on Mondays and then some Wednesdays, just depending on what's going on with the market. Let me expand this. And here, let me go back to my dashboard, my Zoom toolbar just got in the way here. But here, what we do is we get through our concierge message and then market news and research. So what's great about this is this should show up in everybody's inbox. If it's not, please shoot us a note, support@ivolatility. You'll see where we mention our topic for like the Tuesday, which is today. So that's going to be charts. And then we also give some interesting information on what's going on in the market. We typically recap the prior week. We put some charts in here from IVolLive. Speaking of charts, which is why I want to specifically bring up this piece that we published on Monday. And what's cool about this is we show things that are happening within the market using IVolLive tools, right? Because it's like if you have this powerful mechanism at your fingertips, it's like, how do you best harness that? And that's what we write about in these Monday pieces. And again, we'll do some on Wednesday if it's an especially interesting market. Here we were analyzing the VIX, and we were looking at the VIX. Price is in blue, so you could see price broke below this lower Bollinger Band. Implied volatility for the VIX is in green. And so here, we're writing about that, and we're telling our viewers and our readers, why that's important and what that means. And then most importantly, okay, now that you have that information, how do you play it? How do you take advantage of it? And we give some ideas here. So for an example, last week, communications were pretty weak, AT&T, Verizon, T-Mobile. So we could pull up some of those charts and we could see if there's any, potential entry points or nuances going on with implied volatility. And then we have some upcoming action in travel names, with the summer kind of really kicking in, especially here in the US. So those are really good pieces to get ideas, because then once you have ideas, you go over to IVolLive. Now, what's great about IVolLive is even if you don't have any ideas, running some simple scans will give you those ideas. So that's the great news. Last week, I did a in-depth webinar on the stock monitor, how to run scans. I know we were coming off a holiday week, so everybody was probably pretty busy on that Tuesday. So what we'll do is when we send the email with this recording, we'll also include the stock monitor recording, because what I did last Tuesday is I walked everybody through how to run kind of these scans with a couple mouse clicks. So for an example, assuming you log into IVolLive, you have no clue what you want to do, no clue what you want to research. You could go, all these are preset scans. So you could analyze top stocks by volume. So this is measuring by options volume. You can measure top stocks, IVX mean versus 20-day historical volatility. So when we look at charts, IVX is what we're best known for. That's implied volatility, hence our name, IVolLive. So this is like looking at the future versus the past, right? IVX looks forward, 20-day historical volatility looks behind. And what this is doing is it's running all the complicated math for you and giving you the top names where, the future looks different than the past, right? IVX is higher than historical volatility. So this is the first thing I do when I log into IVolLive is, out of habit, I just run these screens. And what I'm looking for is I'm looking for interesting names that I'm going to click on or add to a custom group. And then I'm going to run those names through all the charts that we have. And I'm going to look for interesting, trading opportunities. So IVX historical range, this is a question that came in prior to us going live today. How do you find like a 52-week range for implied volatility? And this is how you do it. IVX historical range, if you come over here, this is the 52-week low, 30.86, and then this is the 52-week high for implied vol, 66.21 for Newell, NWL. So this is how you would do that. And again, with these scans, we have traders that trade US markets, traders that trade Canadian markets, traders that trade European markets. And so you could just choose whichever grouping you are most interested in, and then the scan will run automatically. So there. And then here we have IVX change from yesterday. So this is also interesting because when I'm looking at charts, what I'll see these spikes in day over day implied volatility. And what this column does is it monetizes that for me. So here you could see it puts it all in numbers. It's showing, where within the S&P 500 we're seeing the most action, day over day. Here's Newell again. So we'll look at Newell today as part of our session because it keeps popping up on all of these scans. Humano, that's an interesting one that I've traded. So what I'm doing is I'm looking through these names and I'm saying, all right, well, what should I analyze further via our chart system? And the way I like to kind of group that all together is I like to create a new group, when I'm putting on a trading session. So you don't need to do one every day. You could do one for the, for the month, for an example, or for the week. But I'm going to do, for the sake of this webinar, June 6th chart ideas, because this is going to tell us, where we should dig deeper. So when you create a new group, you can do this not just for obviously charting ideas, but you could do this for any name that you want to investigate further. So Newell showed up on a couple of those quick scans that we did. We also said we wanted to look at telecom because those were weak last week. So we have Verizon, AT&T, T-Mobile. Those were interesting. We also said travel, so Delta, and then Hilton. And so here you go. We have like a really quick hit list that we just added to, with a couple mouse clicks. The other way we can do that is, when you're building these custom lists, we've recently added these new features where you can just, hit a check mark by a name, hit that plus icon, and then add it to your group. So for an example, there it is, June 6 chart ideas. Also, if you want to get rid of a name, if you don't want to dig deeper, if you say, look, T-Mobile and Verizon are virtually identical in terms of scope. I only want to look at Verizon. I don't want to look at T-Mobile. You can just select that and delete. And so now it's like, okay, we have a cool little hit list that we want to look further on. Other charts I look at every day are SPY for the S&P 500 and the VIX, which you can see. Ooh, let me let a few more people in our waiting room. Today's a popular one. There we go. Everybody's joining us. If you're just joining us, we're kind of in the beginning of the action here. We're creating a list of names that we want to kind of analyze further using our different charting features on IVolLive. So we're just kind of creating a hit list that we can use for examples in today's session. So welcome aboard. So now what we have is, we have a list, 7-8 names. Other things that we've recently added is the ability to name these tabs. So you can see I have 4 different charts tabs up here, and I'll tell you why in a little bit, but each tab has kind of different charts on there for me. And then and underneath these other individual tabs now, we can name these tabs. So like, for example, this is Target. We could say, Target recently got crushed. So we could say something like sell off. So now when I hover my mouse over Target, it tells me why I'm looking at it, right? Target sell off, even before I pull up a single chart. So those are some really interesting tools that we just added. The ability to name a tab and the ability to add with these plus or minuses. You can also upload a file. So if you have a running Excel file and you want to pull those up and analyze using the IVolLive charts or data or whatever, you would just hit open file. Make sure you saved it as a .csv, even if it's in Excel, for an example. And then you hit add, and then that would automatically add it to this group. So if you kind of have a running list kind of before your time with IVolLive, feel free to upload those now and then investigate further. So here we are, a couple charts I look at, every single day. I like to look at what the VIX is doing. So the way to access that is I just clicked on it from my custom list. You can also always add anything you want to look at further here. Just hit that plus icon. I could have typed in VIX and I could have clicked on this right there. Or what you can always do as well is, you see how I have multiple tabs up here. You're always able to add an additional stock monitor, right? Which is what we just were, that screen. A futures monitor for all of our friends that trade futures. Charts monitor, so charts tab. So you saw I had 4 charts tabs going. And then, these are some of our presets. These are like the most popular searches: Apple, QQQ, Russell, S&P. So you can pull up as many of these as you wanted to, Brent crude, light sweet crude, and those would just populate up here. But for now, we're in the VIX. I just wanted to show a couple quick hacks for best use of the platform. Now, within the VIX, we won't really spend a lot of time on the left. The left is fundamentals. Charts live in 3 main places, I should say, on IVolLive. The first place the chart lives is over here on the right. And what this is good for is if you want to mark up the chart, if you want to add technical analysis, this is the place to do that here. The second place charts live that I think a lot of people don't realize is down here in the options chain. And what's great about this, you can look at price and implied volatility charts here, and you can look at time skew charts here. So for an example, we're here on the VIX. These are the options that expire on June 7th. So, tomorrow. So if we clicked on price and implied volatility history charts, here's what's so cool about this. You can look at bid, ask, last for this particular chart. I like to look at last price because last price is always the judge, jury, an executioner, right, of a transaction. So here we can see that the price of this option has been going down throughout the day. The other cool thing we can do with this view is you can look at volume, and it will tell you at what time, at what bid and ask, and at what last price, and what implied volatility level the trade took place. So you could look at this and say, okay, well, where's the action happening? We had 16 contracts trade. Once implied volatility spiked to 122.96, and here was the price that the transaction happened. So if you're trading this underlying as well, you could probably find your time block as well. So this is great because it shows you when, where, why, what, how, just with a simple click of the mouse. Another great thing about the options chain view is you can look at the time skew. So this is another one of my favorite charts because what it's telling us is, this option expires, 1 day out for the VIX. But if we came over here to SPY for an example, just to jump a little bit ahead. So if we came over to SPY, or even Newell, because Newell showed up on a bunch of our searches, and we pulled up like a time skew chart for Newell. What's great about this is saying, okay, here's implied volatility over here on the y-axis. Here's maturity, time to maturity on the x-axis. So what you're able to see is the implied volatility readings in the near term and also into the future. So if you saw, like, if Newell was going to have an earnings release, let's say in 30 days, typically we'd see a spike in implied volatility and then it would kind of recede. The other thing you could tell here is the difference between calls and puts. So calls are in green, puts are in blue. What I look for here as a trader is huge discrepancies in calls versus put, because that tells me that the market is kind of undecided on which direction the stock might go, and that creates very interesting trading opportunities. So those are some of my favorite shortcuts to get to, you can see here for the VIX. There's this big anticipated spike 30 days out for implied volatility, and then into the future it's kind of receding. So those are very simple ways to access 2 or 3 of my favorite charts. Up here on the right, just to go back to another one of my favorite views, here is kind of probably the easiest way people access our charts is you just click on expansion here, those 4 arrows. That's all I did. And then what you get by default with IVolLive is you get 5 years, up to 5 years worth of history, which is fantastic because just kind of stock and standard, you get 5 years of underlying pricing data, which is blue here. You get 5 years of implied volatility data, which is in green here. And then you get 5 years of historical volatility data, which is orange here. So again, I don't know anywhere else where just by logging in, you can get 5 years worth of that data, because again, I'm just scrolling to individual times over the past 5 years, and it gives me that treasure trove of underlying spot price data. So fantastic resource if you want to go back and look at, again, up to 5 years. Of course, if a company was public for less than 5 years, you'll get up into the IPO date. But this is another one of my favorite views, is the 1-year chart. Here is where, as an options trader, you're going to decide the best way forward. Because if you're a short-term options trader, maybe you're interested in the 24-hour data. If you're an intermediate term options trader, which is kind of what I am, I'm interested from the 3-month to the 1 year worth of data. So that is up to the trader preference. And let me come here. The other thing that you can do from this view, from this charting view, is you can draw. So we can draw, we can do trend lines. So for an example, if I was here, on the 1 year chart, maybe I wanted to draw a trend line for price. So it looks like we had a peak here on the VIX price, then we had this downtrend. So I could draw that, and then this downtrend was broken when price came here. If I wanted to simplify this chart, I could get rid of historical volatility. Here we go. Now this simplifies the chart with just price and then implied volatility in green, which is fantastic. We can also draw a trend line for implied volatility here as an example. So if I come here, I can draw this trend line here. And with our artistic tools, you could be as much of an artist as you want. So different things you could do, you know, just mark, you could do a directional arrow, which I like doing. You could also thicken the line a bit here. So, you know, this is the trend line that you're looking at. And then the other things we could do is you could do custom drawings. So with custom drawings, you're able to come here and like what I like to do is draw the difference between price and implied vol, for an example, for the VIX. And so here is that beautiful drawing. So I'm a trader, not a Picasso, just, you know, an artist. That's my disclaimer. But these are with this view, you're able to mark this up as you desire. The other thing you could do is once you're done, maybe with a markup, you could take a snapshot. And then you could use this for your trading journal, right? You know, why were you interested in the VIX on this date? What was going on? The other thing you could do is you could save this chart layout. So you could do like VIX, June 6th with trend lines. As an example, you could see, you know, I use IVolLive all the time. So I've saved all of these different custom chart layouts. So you could get as advanced or as simple as you want from this charting view. Another thing I wanted to show though, real quick, you know, because we had a question come in, how do you view the technical indicators on the chart? So let me show you guys how to do that. If we come here, let me pull up I'm gonna pull up a fresh one actually. So if we come and we go to VIX, there we go. And I had this one prepared prior to the webinar. So if I come here and we look at the VIX, we say, okay, well, what's going on with the VIX over the past year? You know, and we eliminate historical volatility. We can also eliminate price, which is what I really like. That's what I put on this tab. And so now we're just looking at the implied volatility for the VIX. And the reason why this is such a useful tool for your trading is you can use this to help time the market, right? Nobody can perfectly time the market, but you know, we can use this as a very, very good leading indicator. So let's say we added, you know, Bollinger Bands, just to be simple here, in relative strength index. These are two technical indicators available to you in this charting view. Again, I just clicked on indicators. Everything's alphabetized here, you know, with the different available indicators. So choose whichever ones are your favorite. Bollinger Bands and RSI are simple to read and two of my favorite when I want to get a gauge, the market's health gauge at a glance. And so what this is telling me is that the VIX's implied volatility is approaching its lower Bollinger Band and its lower RSI level. What that tells me is this VIX level is low. When the VIX level is low, option premiums are also low. What it also tells me, though, is as soon as this implied volatility breaks through the lower Bollinger Band, the VIX will reverse. The VIX will go higher. You could see anytime that happens, right? The only certainty in finance is periods of low volatility are followed by periods of high volatility. That's just the way the market works. So once this kisses this lower Bollinger Band, I'll know that I should go long volatility, you know, and I can use that because when I'm long volatility, typically that means the market's pulling back. So I can be short weak names that I'm interested in going short on. So like, this is a perfect example of where I'd use the drawing tool here, because what I'm waiting for is I'm waiting for these two lines to meet. So as soon as that happens, like I would take a snapshot of this. And then as soon as that happens, I'm going to strike. I'm going to go long volatility and I'll go short maybe the overall market or specific weak names in the market. So that's another really good way to use these charts to kind of time your trades. Another very interesting way is if we went to the S&P 500. So if we went to SPY, you know, this is probably the most followed ETF on planet Earth. So the two that I look at every single day before I start my trading are the VIX, and I run what I just did on that chart with the VIX. And then I pull up a chart of SPY. 1 year is kind of a good middle of the road. And then you can see here, this is a beautiful chart. You see the discrepancy, the inverse relationship between price. So here's the S&P spot price and volatility. Here's the S&P's historical volatility and implied volatility. So you can see we have this giant like open gap between underlying spot and implied vol. So this demonstrates this inverse relationship beautifully, actually. Um, this would be one that I certainly save because it shows us, again, this March higher, the market's been strong, and so implied volatility has gone lower. So, again, what we can do here, though, what's great about IVolLive, unlike any other platform, at least that I know of, what you can do is we can get rid of historical volatility, we can get rid of price, we can delete that. And what we can do now is this is the S&P 500 1-year implied volatility. Now I can add those same technical indicators, for an example, Bollinger Bands, and then the other one was relative strength index here. And now I'm looking at the technical indicators for the S&P 500. And what I can see is implied volatility is breaking below a lower Bollinger Band. Implied volatility is coming to its lower RSI level around 30. So what this is telling me is the market is getting overheated, right? Because as this implied volatility continues lower, price continues higher, what will happen is we'll get a pullback. So what I'm looking for is extremes. I'm looking for an extreme move below the lower Bollinger Band and down here to RSI. And when that happens, I'm going to go short the market. So this is two really good charts to use to time your trades. Again, the VIX and the SPY. These are the first two charts I pull up, every single morning to try to decide, should I go bullish, should I go bearish? Or, if these indicators are in the middle, maybe I do nothing. Like sometimes the best trade is to do nothing, so if there isn't a clear direction, I'll do nothing. But right now it's clear to me that the market is approaching some kind of at least short-term top based on the VIX and based on the SPY. So I'm preparing myself to go long volatility and short weak names in the market, which might be a Newell, right? So Newell showed up with these big spikes in implied volatility, which means the market is anticipating something is going to happen with Newell. So if we wanted to look at a stock specific, so, VIX was an indicator and SPY is an ETF, but Newell is an individual underlying stock. So again, within IVolLive, we have thousands of underlying stocks that we cover from the US to Europe to Canada. So Newell is just, one of those. But what we can see here, if we go to this, let's go to a shorter term chart so we can demonstrate a shorter term view. Here's 3 months. And what I'm finding with this chart, this tells me a lot with one look, which is basically price has been going down for Newell, which means implied volatility has been going up for Newell, which means options prices are now juicy. They're now rich. So if I want to sell options on Newell, now could be a great time because those premiums are going to be very juicy. If I want to buy options, they're going to be expensive. So this one quick view told me all of that, which is very, very useful. And then here, like just to show examples of what I do with the drawing tools, I'd be, highlighting this discrepancy between underlying price and implied volatility. And I would probably, knowing me, I would probably, a few more coming in the waiting room here, I'd probably add the downtrend. And then here, what I'm looking for is, will Newell come back and retest this downtrend, or is this a true breakout and it will continue higher? In which case I would draw an uptrend line. And then if Newell's heading higher, implied volatility should be heading lower, all else being equal, until they kiss somewhere here in the middle. In past webinars, viewers have seen me do this with Walmart, with Apple, where when implied vol and price kiss on this chart, I go long the stock, right? So I either do a spread trade, or I sell to open a put option if I'm just, kind of mildly bullish. But that's one of my favorite setups, which Newell isn't there yet, so I could say, all right, well, let me do further analysis on Newell. Clearly it showed up on my scans. It's here on my charting software where, we could tell something's going on. So another way to access charts on Newell that I will show, get rid of that. So again, you have the options chain view, for Newell. So you can see the next available expiration here is June 16th. So unlike the VIX and unlike the SPY, which had options expiring every day, most underlying stocks are on Fridays, right? So 6/16 would be a Friday. Then, of course, July 21st would be another Friday. From this options chain view, you're able to look at all expirations. If you're a long-term trader, you can just look at leaps. If you're a short-term trader, you can look at the next 2 or 3. Again, I'm intermediate, so maybe I'd click on the next 2, but for now, we'll just leave it as all. The mid price, this is another question that came up. What is the mid price? So the mid price is is at the money, right? So it's right near the underlying spot price. So for Newell, that's 8, 73. So you can see that's our mid price here. Strikes, you could look at however many strikes you want. 1, 2, 3, 4, 5. I like to look at 5, but you could look at all. If you like to trade out of the money options, you could have all of them there. For an example. So I just updated that, but you'll see when you go to all, you'll get a lot of these strikes that have very little volume, very little volume, no bid, no ask. So again, it depends on the security and the underlying instrument, but my favorite view is 5. And then you could look at calls and puts or just calls. So again, that's how you can tweak your options view here. And then the other thing you could do is you could click on this gear icon for column settings. And these are the ways you just toggle to green for any criteria you want. So that was another question that came in, but if you wanted row, for an example, you could add that. And if you know specifically what you want, so I like theta, you could type that in, and then you could apply. And when you apply that applies it to Newell. I could have saved it and applied it to all future tabs that I pull up. But for now, for the sake of the webinar, that's how you'd make those tweaks. And again, once you're here from this options chain view, you're able to access those charts I showed earlier. So here, just so everybody can see what I clicked on, I'm clicking on price and implied volatility history charts. So this is showing us the bid, the ask, and the last price. I know a few people just joined, and so this is how I accessed it. You click on that, click that button. This will pop up. You can look at this. This will show you the specific option. So this is the Newell, June 16, 2023, $9 strike. And it will show you the last price of the option traded at. It will show you the implied volatility for the option. So you could see when the market opened, Newell's implied vol was, wow, almost 20 points higher. And then it crashed lower, and then it's kind of seesawed back and forth. And then you can go to the table. And again, this is one of my favorite views because it shows you where the actual money is trading hands, So this particular option hasn't been that heavily traded today. You see like there's blocks of 3 at a time. But this shows you where the actual money is trading hands. So now you can see as the market kind of warmed up, we had 57 contracts trade hands at this 25 cents an option. So $25 per option contract with this implied volatility of 50.66. So the market kind of felt like, when it opened, the implied vol maybe was a bit too high, at that initial spike. So it waited for it to come down a bit, and then traders started striking on this specific option. So that's one of the great ways you can use these price and implied volatility charts to kind of analyze, your entry point for a specific trade. And then here's time skew. So again, time skew, if you just hopped on, we have implied volatility on the y-axis. We have maturity on the x-axis here horizontally. And what we see is this is the implied volatility for a specific option strike price, the $9 strike, into the future. So, our implied volatility is highest 10 days from now, which typically coincides with an upcoming earnings announcement. And then you could see implied volatility recedes for Newell as we go into the future. So that's good to know. Now, because if you're looking at this and you see some massive spike here, 192 days from now, then the market's telling you, hey, something is going to go on between now and then. And so there's interesting trading opportunities with that. So now I want to show the other ways to access charts. That is through the charts tab. When you join us at IVolLive, the charts tab will come stock and standard. So what you'll have as your default is you'll have this view on S&P. So for an example, if you just came here and you wanted to add a brand new chart feature, I had some preset because I do these all the time. So I had some preset that I wanted to show. But if you pull up a brand new tab, this is what's going to show. And if you're like, what am I looking at? What is this? The best way to look at it is this legend. You just click on the color, and this will tell you what you're looking at is the spot price chart for SPY. So remember, this should look very familiar because we were just looking at this in IVolLive, and we were comparing this with its implied volatility, which was heading lower in its historical volatility. So this is your default. It's going to show you the 4 most popular charts within IVolLive. So what's great about this is on the prior view, you were able to draw on it and add technical analysis. What's great about this view is you're able to choose from, all these different chart types: spot price, which is here; implied volatility, which is here; single contract analyzer, which is pretty much what we were just looking at in the options chain, right? Where we were looking at a specific strike price for Newell. IV index, which is also very popular. This is the implied volatility. Total open interest in volume, which is down here. So if we want to look at our handy legend, here is our SPY call options in red, and here is our SPY put options in blue. So very patriotic, coming out of Memorial Day here in the US. And what's great about this chart is, you can see if you want to minimize it, just hit the X. If you want to get rid of it, hit the trash can. So you can see, by and large, again, I'm always trying to take in a lot in a little bit of time because we're all busy. And when this chart pops up, it tells you a lot with a little, because what this is saying is, look, over the past year, all of this is set to 1 year. So always be cognizant of that, apples to apples. More puts by far have been traded over the past year than calls. So people have either been going bearish on the market or buying protection on their insurance, on their portfolio, or selling puts, agreeing to buy stocks if they drop in the future. But either way, you could see the put volume has been significantly higher than call volume over the past 12 months for the S&P. So again, it tells you a lot with a little. This implied volatility tells us a lot with a little. It shows us that, look, while the spot price has been going up, the S&P's implied volatility has been going down. Now we're approaching what I think is going to be an extreme. Here we have another top. We're about to hit that top. So what's going to be very interesting is do we break through that top or do we retrace? And if we retrace, what we'll see is implied volatility move higher. Then we have our historical volatility. So this is showing us, what has been the historical volatility for the S&P, again, over the past year. And you can see, when the S&P is down, we have spikes in volatility, and now it's kind of receding. Another cool thing you could do with this charting tab is you could view this different ways. Some people prefer this view, kind of this grid view. What I like is the Big Mac, what I call the Big Mac view. So here's our top bun, lower bun, everything in between, all the goodness. And what I like about this is it shows me the relationships a little bit better, where S&P is going higher, implied volatility is going lower, historical volatility is going lower, and then I got my options volume here. And so what you can do is you can add, up to 8 charts on any one tab. So think about this in terms of 8s. So you can add up to 8 charts in any one tab, and you can also add up to 8 inputs onto any one chart. So for an example, if I wanted to compare, the NASDAQ to the S&P, I can do that. There's the NASDAQ. And if I wanted to compare the Dow Jones to the NASDAQ and the S&P, I could do that. So now I have all 3 indices on this one spot price chart, which is great. So you could also come here and you could add under implied volatility, and you could search for, QQQ, which is at the money period, 360 days. So again, that would be apples to apples for QQQ. Here we are, which is a green. So we have our 2 green charts. And then I could come here for historical volatility. I could go that, so on and so forth. Just know that you can add up to 8 names. So like for an example, when I was looking at retail trades here on the spot price, I had Walmart, Home Depot, Target, Dollar General. I had all of those all on this one chart. And then I had eliminated these, right? And then you can expand the view. And then I was able to look at an industry, whether that was retail or tech, or what have you. So another thing I want to do is, like, this is the new chart tab that I pulled up kind of live here and on the spot. You're able to drag and drop wherever you would like. So I just dragged that all the way from the right over here to my other charting tabs, because we could see, these are some of the things I've been looking at over the past week or so of trading. So here is my handy SPY. So here we have the IV index. And so I could add spot price. So this is a good teachable moment, how to add any underlying. You just click on add spot price, type in the ticker. Always be very important, make sure this is important, the time frame. So this is 1 year. So now I have that Big Mac view that I like of the SPY, and then here, what's great about this is the IV premium chart, which is down here, our second to last option. So what I was looking at on the IV premium chart is 0 is our dividing line, right? So this is kind of neutral. But what this is telling us is there a premium in the future versus the past? So if you look, for example, let me come over here. Right now, the S&P is trading at an IVX, so implied volatility minus historical volatility of 0.36. What this tells me is, past and future are looking very, very similar, right? There's no clear advantage. When we were here at this peak, at 8.09, what this told me is there was going to be a retracement in implied volatility because we were trading kind of at one of these peaks. Whereas down here, what it told me is, there was going to be an advance, right? So I should be bullish on implied volatility because this relationship got out of whack. And what we can use is 0 as our dividing line. And what's so amazing about this chart, not only for the S&P, but for any underlying stock that you're looking at, is it's going to tell you when the relationship's out of whack. Here we were trading at a minus 8.8. Historical volatility in implied volatility was so low that historical volatility was 8.8 percentage points higher. And in terms of absolute terms, and I don't want to get lost in the math. It's just know that you can use this IV premium chart to really help you identify market conditions, right? Because when we're at these peaks or these trials, when we're in a trial, we'll say, okay, look, implied volatility is destined to go higher, right? And when implied volatility goes higher, the market goes lower, and so that's my analysis when I'm here. When I'm up here, I'm saying, whoa, implied volatility has spiked too far too soon. So that means there's going to be a retracement in implied volatility. When that happens, the market moves higher, right? So I could go bullish. So those are some really quick inferences. This is one of my favorite charts because, again, it's comparing future versus past. Right now, we're in the middle. So there's really no clear indicator for me on direction. But what I'm going to do is I'm going to watch this chart and I'm going to wait for an extreme move up or an extreme move lower. And then I'm going to take a position on the other side. So that's one of my favorite uses of the IV premium chart. The IV difference is similar. So you could do, so here I was looking at SPY and we had 1 year, we're at the money. Again, if you like to trade out of the money options, this is where you select that. So you could be looking at, options within the S&P that are 40% out of the money that are puts. You could be looking at on the other side of the spectrum, the other side of the barbell, you could be analyzing things that are out of the money calls. So it's really just up to you, for trader preference. So we could say, okay, SPY, but let's do SPY versus NASDAQ, for 360 days and at the money. And then our time range is going to be over the past year, for an example. And you'll see the chart view will automatically update. We can click here on those 3 bullet points to go into full screen mode. And again, what this is showing us, like if we come to present day, we have down here on the x-axis, we have date. On the y-axis, we have the difference between the implied volatilities. And if we come to present day, we could see the difference between, the SPY versus QQQ. So essentially that's a negative number, negative 4.71. And what that tells us very, very quickly is that the NASDAQ has been trading with higher implied volatility than the SPY. So tech names, which makes sense intuitively because tech names have been a lot more volatile than the market overall, over the past year. They got destroyed in 2022, and now they've been trying to make their comeback in 2023. So you can see as I've added these charts, the view kind of auto updates. You can always revert to whatever view you like best, if you like looking at S&P the most. And then you can also, again, have up to 8 charts on this screen. So moving right along, here again, this is just an isolated spot price. So here you could see what I had pulled up prior to this webinar. I was analyzing NVIDIA, Broadcom, and Qualcomm. So AI has been this huge, hotly debated topic within the market, and AI stocks have been very hot. NVIDIA just passed over $1 trillion market cap, which we wrote about in our editorial last week. Broadcom and Qualcomm have also recently announced moves into the space. And so I was analyzing those three stocks. And with this chart view, again, this is their spot price, but now I can pull up any of these different measures and I can analyze those three stocks against each other, from the same screen. So that's a great example of what I was looking at kind of in real time. Another one that I had kind of pre-prepared, this is the banking sector. So what I thought was neat about this chart is it allows us to compare the big banks, JP Morgan and Wells Fargo, versus the smaller banks like Pacific West, Regions Financial. And so I was analyzing kind of these huge mega banks versus these regional banks that have been under all kinds of pressure. And again, if you wanted to get rid of one, let's say you don't care about, TD Bank anymore or PNC or Wells Fargo, you hit the trash can and that line automatically disappeared. So this is another really good feature. And what it shows is I've got 1, 2, 3, 4, 5, 6 here now, and I could add 2 more if I wanted to. And then we could also adjust the time. This is looking at 3 months. We could look at 1 month, so what's been going on in these banking names over the past month. When we were looking at these charts a few months ago, when Silicon Valley Bank went belly up, I mean, these lines were insane. And the implied volatility lines beneath the chart were also insane because there was just so much volatility in that sector. So that's another example of a chart. And then here, we have, this was PacWest. This was actually the one of the banks that was under all kinds of pressure. And what I thought was interesting about this chart that I built was I have my spot price here showing PacWest, had a great start to the year and then a not so great spring. So we'll see what happens in the summer. And then what I was comparing was I was comparing the implied volatilities for different time frames. So this is looking IVX 30. This is looking 30 days into the future. This is looking 7 days in the future, and this is looking 180 days into the future. And what was interesting is I was looking at the chart, and you can see there's these periods where 7 days out, volatility went nuts. For Pacific West Bancorp, and that makes sense because at that time, May 3rd, nobody knew if this company was going to get taken over by the feds. So there's this huge spike in short-term volatility. So I could have played the difference between short-term, mid-term, and long-term on the volatilities if I was confident that the stock wouldn't go belly up, of course. So I thought that was a very interesting chart, and you could do that for any name. It doesn't have to be PacWest, of course. You could compare these different volatilities, time frames for anything. We could do Walmart, Newell, whatever stock you're interested in. Here was the historical volatility. I always like to see kind of the historical vol, which you can see is going down recently, and then total open interest and volume. I thought that this was a very interesting chart for PacWest in particular, because what happened as we went into May is the puts went crazy, put volume versus call volume. So that meant either people were insuring their portfolio or they were betting on the downside. You could see there's a lot more bearish activity than bullish. So I thought that was very illustrative too. So those are a bunch of different ways to use the charts. Obviously, if you guys enjoyed this, shoot us a note at support@IVolLive.com, because we could do a part 2 session next Tuesday. And what we could do in that part 2 is we could kind of hang out within these different tabs and we can analyze a bunch of different names and indices and things like that. But again, to recap, the 3 ways to access a chart, you would have your underlying here, right? So the VIX. For this example, you'd click on these 4 diagonal arrows. If you missed the beginning part of the presentation, this is how you look at up to 5 years. This is how you have everything on one chart versus all of those separate charts from that tab. So you have price in blue, you have historical volatility in orange, and you have implied volatility in green. So that's what you have here, up to 5 years and as short term as 1 day and 24 hours. So that's the first way, and this is also where you add technical indicators if you so desire, and you save your chart layouts. Whatever you have on this tab will automatically save under the tab view, but from this layout, that's how you would save it. The other way to access like single contract analyzer, table views, time skews was right here. So you click on the magnifying glass and we get our price and implied volatility history charts. You click on that button here and you get the time skew. It's kind of like a little like smiley face type icon. That'll give you the time skew for the option. So that was the second place you can access charts. And then the third is within the charting tab here, where again, it will kind of automatically save whatever you put on here. And then if you need to add additional charts, like I've seen sometimes where there's 10 charting tabs up here, because we're looking at 10 different things, you would just hit this plus icon and you would add the chart. And what I like charts most, key takeaway is to help time the trade. So I use all of these different charts to help me time whether I should be bullish, bearish, and to what extent on bullish or bearish. So for there, I will pause and I will just mention, again, this is the market news that we put out. I did a lot of charting in our update that we put out on Monday because I knew we were going to cover charts today. But again, if you are not currently a user of IVolLive, then that is no big deal at all. All we need you to do is shoot us a note, support@IVolatility.com, and we'll get you all set up. So no worries there. So I want to pause now, take a sip of water, and then see if we have any questions that have come in during the interim. And then also we will be sending out this recording to everybody that registered for the webinar. So that way you could go back, charts is kind of a beefy topic. You can go back and see where I clicked, how I clicked, as needed. So let me pull this up. All right, thank you for the kind words. Yeah, that's a great question, Steve. For the VIX not being as an effective, excuse me, market sentiment indicator as it used to be. Yes. So 2 questions. Do these work for SPX? Yes, they do. So if we come here, let me show how that works. So let's say you had just logged in. I was looking at SPY earlier, but if we wanted to do, let's clean this up a little bit. So Target I was looking at, Pacific West we covered, NVIDIA we covered, Newell we covered, Walmart we covered. I was looking at some futures earlier. VIX we had the question on, so we'll also look at that. But you could do SPX. And here we go, here's SPX. And now what you have with SPX is you have our charting view number 1, so here we go, 5 years worth of implied volatility and historical volatility data for SPX. So you could do everything you want with technical indicators, take a snapshot, save, etc. So that's the first way you would look at SPX. Then we have the individual, like contract level view, where we can look at our implied volatility and price history charts and table here. You can see where all the action is. It's kind of a slow start on SPX this morning, and then things really kind of heated up. And you can see where that heated up, around here. Implied volatility of 1431, last price 2082 for this strike. So, and then you can also, of course, access our time skew chart for SPX. So that's where you do it. And you could also do that from within here. You would just do underlying and you would do SPX. And then you would choose your time range, let's say 1 month. And this would be the third way you would find SPX. So anytime, and if you can't find an underlying, I mean, we cover thousands. So if you can't find a specific underlying, just send us a note, support@IVolatility, and we'll be sure to send you the specific ticker so you can pull it up just in case it's like a ticker discrepancy. So that's how you would find SPX. So VIX, I don't know. I'm ambivalent on, as a trader, I still check the VIX every morning, partly out of habit, I'm sure. But what I like about the VIX, what I think is so unique about IVolLive, is everybody looks at this. Everybody looks at the spot price of the VIX, right? So they say, okay, when the VIX is high, people are panicking. When it's low, people are calm and complacent. So when it's high, it makes sense to be maybe if if you want to use it as a contrary indicator, when it's high, maybe you buy while there's blood in the streets. When it's low, maybe you're cashing in your profits, or you're buying puts as portfolio insurance, because when the VIX is low, options premiums are low. So those still hold true as true. So I don't, poo-poo on those at all. But what I like to do is I like to isolate implied volatility on the VIX. So this is like the fear gauge for the fear gauge. And I think it's super effective because, the fear gauge on the fear gauge is going to tell you where the fear gauge is going next. And that's why I added, so this is just the implied volatility for the VIX, right? This is not historical volatility. This is not price. This is the underlying implied volatility, which is fantastic, because then when we add things like a Bollinger Band, or we add things like a relative strength index to this, what this is telling us is that the VIX's implied volatility is very low, right? And when the VIX's implied volatility is low, obviously that corresponds to a low price for the VIX. But here's what I look for. As soon as this breaks below this lower Bollinger Band line, or it breaks kind of here below this 40 or 30 level on the RSI, what this is going to tell me is that the VIX is going to move higher. And when the VIX is moving higher, then that means the market will be going lower, all else being equal in general. So I'm able to use, when you have IVolLive, you can use implied volatility for the VIX to know kind of in advance when the VIX is going to change direction. So here we knew when it broke above the upper Bollinger Band on implied vol, we knew that was March 17th, 2023. So we knew in March, this is when the banking crisis was going nuts. Well, once it broke through its upper Bollinger Band, what this told me was it was inevitable that the VIX's price was going to go lower, because I knew the implied volatility would have to go lower. It had gone outside of its reasonable trading range. And so from here, you're able to use this to time, and go bullish on the market, or at the very least do a reversion to the mean trade. So, a tool is kind of like when everybody's following it, everybody gets the same results. So kind of everybody knows when you have price, a high VIX or a low VIX, what that means. But what most people don't have is they don't have access to the implied volatility of the VIX, because this will be a leading indicator. And this will tell us, again, as soon as this thing breaks below this lower Bollinger Band, I'm going long the VIX, because I'll know it's going to at least revert to the mean. And this is one of the key tools that I haven't seen really available anywhere else, or at least widely available anywhere else. And it's why I check this. What's funny is sometimes I don't even check the VIX's price. Like I'll just have the price gone, and all I'm looking at is the implied volatility of the VIX, so like the fear gauge of the fear gauge. So anyway, that's a cool little hack that I use to time the trades, because it will tell us where the VIX is going to go by looking at the implied volatility. SPX volume. Yes. So if you look at SPX volume, so we didn't really cover the fundamentals today. So the question was, can you look at the volume for SPX? And really, can you look at the volume for underlying anything, right? Any underlying stock or ETF? What you would do is you would come here to the left-hand side. So we can do a whole session dedicated to the fundamentals. But where you would find the volume indicators would be over here on the left in the fundamentals. And what you could do is you could add anything you want to see. So you could see the average volume over 1 month. You could have, or average open interest, average option volume. You could look at the beta, which for S&P would be like comparing it to itself. You could get the change percentage. You could analyze the dividend yield. You could look at some of these things that we don't have time to cover today, like implied volatility percentage, which is my favorite measure here, IVP. And then we could look at this last one here, and then you could hit apply, and it will apply to just this one tab, or you can do set as default. And then what that will do is that'll bring up, that'll bring this same criteria up for any tab that you populate within IVolLive. For example, here's Walmart. And if we pulled up something new, it would populate there as well. And then other places you can look at volume measures, just real quick. These are great questions. You guys really got me thinking here. So the other thing you could do is when you go to this custom scan, these are the different columns available to you within IVolLive. So I don't want to spend a ton of time on this. I'll email out the tutorial I did last week on how to run these scans, but just check this out. These are the different things that are available to you. You know, you could look at, for example, if you were analyzing SPX right here, these are all the things you can analyze: 52-week high, low, ask. Here's our volume metrics. Here's all the betas, the bids, the change since open, correlations. Let's see, dividends, right? When, how much, the historical volatility, earnings per share, implied volatility. HVP is HVP, like historical volatility percentage. IVP, which again is my favorite, which I covered in depth in that last tutorial last week. All of our different implied volatility measures, which again, thanks to our name IVol, you can imagine we stress implied volatility quite a bit. Our implied volatility high-low, the 52-week range, the industry that the company's in, the low, the market cap, open interest, options volume, for puts, for calls, previous close. So again, all of this is alphabetized, but this is all the data and information available to you. I don't want it to be overwhelming because it doesn't need to be. You can easily choose what you want to see and what you don't want to see. You can see I have this pretty simple right here. It's just, 8 or 9 columns visible, and I could whittle this down even more if I wanted to. All I would have to do is, come here, turn anything green to red, hit apply, and you can make this super simple. Super simple. And you could do that per group. So you could have a group that was like just indices, maybe futures, SPX, NDX, and the Dow. And then you could have another group that was the ETF versions of those, SPY, QQQ, for an example. Here, what we did is we did a custom group based on some interesting things we found in the scan. And then we dug deeper on Newell in particular, and on the VIX, using our different charting techniques. So great. Those are all excellent questions. Any more? We're at support@IVolatility.com. I hope you guys got a lot out of this. Shoot us some feedback. Let us know what you thought. We're soliciting feedback for these live webinar sessions. We love doing them. We just want everybody to get the most out of them so they can apply that to like actionable options trade during their options trading. So thank you for the kind words, David. Appreciate that. It is a very powerful platform. So it's all about learning how to harness it the right way. And that is exactly what we cover on these Tuesday sessions. So thank you guys so much. It's been a pleasure. This has been Jonathan with IVolatility. Until next Tuesday, happy trading.